investors are adopting a cautious trading approach as they position ahead of Monday's 120 billion naira bond auction. Emmanuel Orji, Treasury Team Member at Access Bank, joins me now for more market movements. Emmanuel, thanks a lot for joining us on the show today. One of the highlights of this week was the midweek primary market auction. Walk us through the results of the PME we saw on Wednesday and how investors are also positioning for Monday's bond auction.
Hi, David. Thanks for having me. So like you mentioned, on Wednesday, we saw the NTB auction being held, where the DMO offered roughly 250 billion. But at the end of that auction, we saw them largely oversell, mostly doubling that amount on offer. But however, on the long end, we saw a slight depreciation, a slight decline in rates by 13 basis points to close at 22.8%. Post-auction, we have seen some demand, albeit not aggressive. We've seen that long end that closed at 22.8 trade as low as 22.6%. The reason for this not so aggressive demand is because of over the course of the week, we saw the OMO auction on Monday where the CBN offered over 1.5 trillion worth of securities. So at the moment, there's sort of a saturation in terms of NTB. So we have not seen that aggressive demand in that market on the back of that auction.
And talking about liquidity levels, the movements we've had from the CBN as well, and what we should expect on Monday, looking at the 2029 and 2031 papers on offer, the 120 billion naira bond auction on Monday, what should we expect in terms of subscription volumes and yields?
So in terms of liquidity, we've seen liquidity being in a repo for the most part of this month and also this week. Like I mentioned, the OMO auction that took out 1.5 trillion from system liquidity. Currently, interbank rates are hovering around 32%, and we expect this to persist heading into next week. In terms of major liquidity we're expecting for the month, we're expecting a coupon payment of roughly 200 billion, but this is coming towards the end of the month, and also the FAC allocation that also comes in towards the end of the month. So we expect the tight system liquidity to persist until the end of the month. In terms of the bond auction, the DMO will be offering 60 billion across two maturities, the 2029 and the 2031. That's a total of 120 billion. In terms of where we expect rates to close, market has been kind of lackluster since that last bond auction, and rates are currently still trading at the previous auction level, where the 29 closed at 21% and the 2031 closed at 22%. In terms of our expectation, we expect to see a further increase in rates by roughly 20 to 30 basis points, given the tight system liquidity and also the weak market appetite for bond at the moment.
And looking into the new week as well now, it's quite a pretty packed week. We're expecting the inflation numbers to come through. The president is also expected to present the 2025 budget to the Joint National Assembly, and definitely the bond auction would hold on Monday. But now, where does Access Bank also expect the inflation print for the month of November? And looking forward into how we'll see borrowing plans go even further, how are investors positioning across those lines?
Yeah, in terms of the inflation outlook, we're expecting to see a further increase in inflation to most likely cross the 34% handle. The previous inflation print for October was at a 3.9. So given the sustained price adjustment in the price of PMS and also the ripple effect that is had on food and also core inflation, we expect that ripple effect to persist and continue to put an upward pressure on inflation. So most likely see an increase in inflation crossing the 34% mark at the Monday's expected print. In terms of borrowing plans, this bond auction is the last major auction for the year. But however, given what the DMO have been doing, overselling at the NTB auction, we'll most likely see them also oversell at the bond auction on Monday as well, in order to continue to aggressively raise domestic funds for the budget. Obviously, we have seen next year's budget plan, where they also hope to persist in this aggressive borrowing heading into next year. So I think for bonds and for treasury bills, we expect rates to remain elevated, particularly in Q1 of next year.
And for the naira, what should we expect into the new week?
I think for the naira, we saw some sort of a win this week. Ever since the B-Match platform came online, we have seen a significant appreciation in the naira from roughly 1.6, currently trading at the FM at 15.32. We expect this to maintain these levels, particularly for the most part of this month, as the CBN continues to also provide supply into that market. So we will definitely not be expecting any major pressure into that market, as we continue to see some renewed foreign portfolio investors into that market, as well as CBN's intervention.
Well, Emmanuel, we'll have to leave the conversation here for now. Thank you so much for the updates there. That was Emmanuel Orji, Treasury Team Member at Access Bank.